All right, ladies and gentlemen, I hope you're having a wonderful evening. We are almost done with October, and now, once again, we have a Thursday night, and I have a live watch list for you. We're going to go over what happened in the market today. We're going to talk about tomorrow, and then we all need to prepare for the final week. Because next week, you get the mega earnings. You're going to get the run-up until the election, then Powell after that. And now we had a very interesting day with a couple of things changing for bonds. So you may see the title if you don't know who Nick TIMIRAOS is. He is the Wall Street Journal reporter some have dubbed the Fed leaker. Now, he hasn't really made headlines in a while, quite interestingly enough, but he kind of had an impact on today after all of the data. We had what was it? We had three different sets of data. You had the PMIs, you had the new home sales, and then the jobless claims, and all of that data came in hot. The bonds were not looking good, but then Mr. TIMIRAOS came in with a tweet related to bonds, and I think it's very important because it does talk about the soft landing. It talks about the recent run-up. You are not the only one perplexed that we got a rate cut and bond yields went up, and now maybe we start moving off of that. And then not to mention, man, we got to get over October because it's almost done. People saying October, surprise or not, but that's it, man. We are entering in the end of the month, getting close to the end of the year, the holidays, and then you're going to get a new president before you know it, baby. So, Chattadonia, we got a lot to go over. I got a couple of plays. Oh, I have a great play. Oh, dude. Oh, no. I have actually a special play. If you are here on the live watch list, I hope they watch it. I'm going to give you a good play today. I have a secret play. It's the best one. I'm telling you, it's a secret. They don't know, but it's a good play. Great play, even. I'd say it's the best play on YouTube. I know YouTube. I've done YouTube. Thousands of videos, and I'd say it's good. It's a good play. You'll see. You'll see. I'll tell you. Get out there and vote. But so it's going to be good, man. So I hope you guys are ready for that one. And then I have a cool chart. I'm going to show you what Nikki T was talking about. So what I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. I should have something to show you on screen, but like literally, that's why I tell you guys how to find it. youtube.com/the stock market/live, because even then it doesn't even show up on my own recommendations, man. I can't. There you go. So it's already set up. Look at that. It's already ready to go. It'll take you there after this live stream as well. You make sure you like the video, and I will see you there tomorrow. We are going to get a little bit of data, consumer sentiment. I don't think it'll be the most important thing, but we are going to, we could take any set of data right now, but you do need to notice the unique thing in the market. So we will talk about the recent movements and even kind of what do I expect over the next couple of days. So I have all that, the plays, the good stuff. You already did what I asked, I hope. I hope you liked the video. But now, my people on the recap, bear with me. I got to say what's up to the beautiful Chad, baby. How you living, baby? Good evening. What up, Brain? What up, you say? What up, hi dear? And Johnny Stallings, baby. What's going on? Oh, how we living, El Coyote? Blazing, Mike, Henry, Johnny, El Trapado, you say, Star Model, Javier, whoa, Brown Tom Crows, baby, Birdie, Jay Samuels, baby, all good day, Star. What's going on? How we living, John Moore? How we living, Tim Whitman? What's going on, sir? Jibber, will ya? Ooh. So good evening, man. I didn't say good morning. I'm proud of that. Man. It's a good day. It was a good day, except for how I woke up. If you weren't there, I told the story. I ran into a door in the middle of the night during my bathroom break. My girl, you know what she called me when I saw her? It's crazy. Apparently, I look like Harry Potter because I got a cut right above my eye. And now she called me Harry Potter. I was like, I grew up in a very strict household. Harry Potter was haram. What do you mean? And then I got it. I was like, oh, yeah. That's how I do it. I have a huge gash on my head right now. Oh, it's crazy. So we'll see. But Chattadonia, I hope you guys are ready. But now let's not waste any time and get right into it. It was kind of like yesterday today. You actually ended up closing green, so that was the good part. We were talking about it even live on stream. If you didn't know, the last 3 days, you finally had pressure. It was literally your first 3 days down, I want to say since September. You finally broke out of that streak, so people were feeling a certain way to the downside, and then we did relax. It felt like yesterday because what ended up happening, the jobless claims were hot. The bonds gapped up in the morning due to the global PMIs, but by the time we had our jobless claims, by the time we had our PMIs, the bonds went from +5 to negative. Stocks were getting pressure. You were going to be testing the 5,800 again, and then all of a sudden, the bonds started rocketing out of nowhere. So this is what I'm talking about here. You could kind of see how today played out with the bonds. You had this little gap up and it was looking good, but by the time all the data came out, the bonds got killed, and then the stocks, they kind of did the same thing. Again, we were breaking into those levels. It felt a little bit like what we were doing yesterday, but now literally without any event, without any data, the bonds start taking off around 10 a.m. And remember, the last, if you haven't been looking at the daily chart, and we need to talk about this, a lot of people are ignoring it. Bond volatility is literally at the highest point it has been all year. The bonds have been an absolute mess, so I don't think they're out of the gulag just yet, but they might be given the seasonality. And then Nick Timiraos, this is what he tweeted. He had another tweet. There was words behind it. He was talking about 1995 soft landing, but long story short, what this chart is showing you and the implication, right away, you saw the bonds get a bid off of it. This is showing the weeks after the first rate cut, what happened to the 30-year bond rates. So long-term bonds, literally exactly on TLT, and it's showing how in a few instances, rates have gone up after the first rate cut, and then where do they end up? So 1998, the rates went down, and then they went up after the rate cut, and 24 weeks later, the rates actually ended up higher, but that was a hard landing, and then that led into the tech bubble. What Nick Timiraos was trying to compare it to is 1995. You see this dark blue line? That's what he's saying, or he didn't say it, but literally right when he put it out, the bonds started getting a bid, because if there is a soft landing and it does actually work out, or even like 1995, the bonds went up after the meeting, but around 8 to 9 weeks into it, the yields started to decline, and then 6 months later, the yields were actually a lot lower. So consider the yield move that we've got, all the nonsense with the Trump trade. This was a very interesting one, but it woke the bonds up. I'm telling you, every day there's no reason to hold the bonds right now. When you've been seeing every little headline has chopped it down. So the fact that this little tweet gave it a bid after that data, it's something we got to look out for. But if this is the trend that we follow, looking at this chart, there is only one instance where the Fed did cut, and after enough time, even 3 months later, where the rates didn't go lower. So maybe what you're seeing now could kind of just be that unique knee-jerk reaction given the situation that we're dealing with. But this is important. I'm definitely going to be watching this both in the run-up to the election here and then right after, because everybody is going to be looking at the bonds. I even brought it up today. I already heard people talking about it, and just keep in mind, if there is any front runs in certain things, remember by the election, what one thing Wall Street loves to do is right when the event comes out, they're going to be like, well, it's not that bad. It could have been worse, and then it's going to take time. So I'm already hearing people talk about that. They're already finding parachutes to the Trump trade idea. So I would not be surprised if after the election or shortly thereafter, even if it's Kamala or Trump who wins, I would not be surprised if you see asset moves and people say, you know what, well, still going to take 2 years for the next president or for the policy to do this, and then you're going to get your bottoming out and then a final movement. So keep that in mind, but that is key number one. And now coming into tomorrow, I hope you guys realize that runway is getting shorter and shorter. So tomorrow now, it's going to be Friday, and then it's going to lead us into that very big move next week. But I'm not really expecting anything. I think we either do absolutely nothing tomorrow and we hold kind of this little range we've been at over the last couple of weeks, or you get a big move to reset you back up to the high, or to go to the lower end of the range that we've been in. And this is something you got to see, because we have been holding up no matter what you think is happening. That was my Jerome Powell. like, look, I mean, where have you really gone no matter all the headlines? Again, gold, bonds, the dollar, a lot of other things have moved heavily, but when you go and look at the equity indexes, they haven't really gone that crazy. So you got to pay attention to that, but I'm going to think we either get something range bound, either aggressive or minimal tomorrow, and then that is going to set us up for next week. Even this weekend, whatever happens with the election, polling, the war, anything, maybe even global drama, that's going to give us the starting foot for next week. And then next week, you get all of the big tech companies, and then that'll be the final trading week ahead of the election. And then Jerome Powell and the Fed is after all of that. So it is going to get wild. And like I just told you, I kind of already shared these little fun facts with you, but I hope you realize this is what I've been explaining for a lot of the moves. Even when we dropped 2% yesterday, I was just explaining how, again, even if the market moves, it's not really moving. And you got to realize that a lot of other asset classes, even some individual names, go look at the names that even had a decent earnings so far, there's a lot of things moving, even other global currencies. And the fact of the matter is, until the election, the stocks probably are not going to move either. And then that's the first thing. But the other thing that I'm so surprised that people have not talked about this, but it kind of makes sense because it's a little lower. But last time this happened, I mean, you had a lot of eyeballs on it, but you guys realize bond volatility is literally at the highest point all year. So take a look. This is the MOVE index, and it's literally at a 1-year high right now. So it doesn't look like much because bond volatility has been elevated for a while. But to give you an idea, this was the same bond volatility level the week before SVB. So it's high. It may not. We've had an elevated volatility since the bonds have been getting blown out, But at the end of the day, I mean, this is something that I think a lot of people are ignoring. That's why when we get some of these weirder moves, or you're looking at the market, or if randomly you get pressure out of nowhere, that bond volatility, eventually it brings out stock volatility if it stays up there long enough. So that's kind of what I think we've seen a lot of, but don't be fooled. I would have caution. I mean, the bond volatility, it's not saying that we know what's going to happen. That bond volatility is actually saying the opposite and saying, bond yields are rapidly moving and there is a difference in spreads and premiums that is higher than any other point this year. And why? That's something you should be asking. So if that chills out, then I think all will be well after the election. But until then, I still think we're going to get this weird movement until we finally release the pressure with the event, the election, Powell, and then close out the end of the year. So Chattadonia, I hope you guys are ready for all of it, but you're definitely going to hear about bonds and a couple of things moving forward. But if the bonds chill out, that's going to be one less thing for the market to worry about. And then it's all about the home stretch. And from there, man, people are going to be making their run-up plays and front runs and taking profits on all of the election trades so far. So hope you're locked and loaded. But now, let us get into the plays. So, right off the bat, I mean, how can I not start off with this play, man? Tesla. So we hit a good play. We even grabbed one in the morning. And I gave you a call out. I didn't tell you what play in the AM, but I told you exactly when I bought, and I was giving you some option analysis on stream. But we got a good play. It went up like 400 or 500%. But dude, this was a very good earnings, man. And I talked about it today. It was already doing good before the event, and that's why some people were asking, how high can Tesla end up going? And the fact of the matter is, just don't forget, it was at like 265, even 270-ish right ahead of the event. Then they rescheduled, and then the market kind of came down with other things. So they were good. They just kind of got downgraded after the event, and that killed a little bit of the hype there. I think it even brought in a lot of shorts, but it's been a while since you have this was very reminiscent of the good old days where Tesla would like dominate the market, and move the NASDAQ. Even at one point when we were selling off today and everything was still like red while the bonds were, Tesla was the thing that was lifting up the NASDAQ. So I just think it was a really good earnings. It was a good trade. I think it caught a lot of people off guard. 20%, definitely a multi-standard deviation move. So it does remind me of the China trade moving forward. I think there's a lot of room for it to go crazy if people really get hyped on it. but I think it's going to be choppy. I think you're going to get a lot of pops and then, gas brake dip on Tesla, but it should generally start to edge up if it could start stringing together good earnings and everything else, because you got to think about it, man. Even the Cybertruck, that thing's turning a profit. So I liked it, but we'll see how long that continues and then whether or not it even gets driven down by the broader market. So watch out for that. That is play number 1. And then play number 2, I told you guys the earnings, the plays that I liked. I only made one of these plays today, but we went over the earnings, and I was saying, there's going to be a lot bigger companies next week, but there was still a couple as we got here to the end. So I gave you guys a good one if you were there live. I told you which ones I thought would move 10%, and literally, this is what I want you guys to notice. This is both like understanding how fickle earnings are, but then now, too, if you want to think about a play for tomorrow, these plays that are expected to move big, then they move big, but then they barely move on the open, these could be the ones that you go for the continuations. So the only one that stuck was DEC. So we were talking about DEC, and that one moved 10, and then it actually held when we're looking at it now. It held up 14. Edwards Life Sciences, this thing dropped like 7%, went up 6%, and then now it's back down to 4. So I still think this one could move. And let me, what's the other one? Dexcom, and I'll show you another example. Dexcom did the same. Dexcom went down 10%, now it's down 1. So these are the ones that might be able to move tomorrow, but you know what it reminds me of? Whirlpool. So Whirlpool, this is one that kind of moved around, and then it chilled out because the liquidity was low, and then all of a sudden it just took off this morning. But that one was a crazy post-earnings continuation. So see where these go tomorrow. But again, if DEC ends up holding up, that'll be one of them. But I also think you might get some good post-earnings. Just be careful. A lot of the spreads are wild. I feel like, too, if the spreads are really insane, it's usually going to fail. I mean, any of the post-earnings that I haven't played, and thank God I didn't, or the ones that I ended up forcing, the spreads are all also terrible. UPS, 3M this last time, the spreads were awful. I found like a decent play, but those never went. Like even Tesla's spreads were bad in the morning, but eventually it tightened up, and then I was able to get a good play that ended up going up a lot. So just be mindful of that. I think that one's a interesting thing to look at, but that is play number 2. And then finally, are you guys ready for the secret play? This is it. I think it's a very cool thing I'm going to show you. I found the snitch. Something is snitching about something. I found a snitch. Did you like the video? I hope you liked the video. I don't think you liked the video. I'm going to clean my glasses while you like the video. This one's an interesting one. And it's going to revolve around the Trump trade a little bit. And honestly, we're going to look at the one that did the worst, but the industry that did the best last time there was a sweep. And I was thinking about it, and I started looking up some things, and I was like, it kind of matches up very, very well. So your play that I think is snitching, my friends, and I don't have a play on it yet. I'm probably going to get one. The only thing I don't like about it is that it's already high, kind of. But the play, my friends, oh, you got it. It is KRE, regional banks. So I don't care about your politics. That's a personal problem. It's actually a problem for some of you. KRE, though. It doesn't matter who you care about or voting for. I think this is going to move a lot with the election, and especially if Trump does indeed win. I think this thing is going to have a lot of upside on it and will go crazy for a little bit. Now, let me show you why. Because even in soft landing or not, just again, Donald Trump has a history with low rates. I think that's why it went up last time, but they were smaller cuts at the beginning of his presidency. But all in all, that was the number one performer. So that's what I'm saying. If you go look, there were some industries that did really bad, but under the 2016 Republican sweep, regional banks went up 24% that year. So that was a huge return. And then I was just looking at it because regionals have came up, and while everybody sold off the bonds, this is what I just want you to notice. Overlay regional banks with TLT, and you will notice something very interesting. The last couple of years, anytime the bonds, think about it, TLT goes down, the bond yields are higher. That hurt these banks, right? That's why, look at it, when there was a fat gap and the yields rocketed up, eventually the banks got killed, actually, right? That's why we had SVB, then the regionals, and then the yields went a little higher, then the regionals went really low, and then we kind of stopped going higher on the rates, and then the bonds started going back up, or the regionals started going back up, and the bonds a little bit, and now yields are still high, but the banks are still up here, right? So do you guys remember when Donald Trump odds started to get really big? It was literally right after the debate. So take notice. After June 29th, bro, the regional banks rocketed. It doesn't matter what the bonds do. The regional banks led the run-up on the rates. And as the rates got a bid, the regionals led it. And then as the bonds dropped, the regionals are not shaking off and selling off with it. So I think this is the snitch, a.k.a., like I was telling, I have to do a little bit more. I mean, I could be wrong, and I'll research it a lot more, actually. But this is what I was telling you, where like people are saying the Trump train, but and they only talk about bonds, but I think there's another part of the trade, and I feel like going long on regional banks, I think that might be it. If there is truly a sweep, if there's going to be a true indicator of that, I think you would actually end up getting lower rates. That's why the bonds might be able to move around. But again, think about it. If the regional banks really believe the bonds, they would be selling off. Do you see what I'm saying? So this is the asset class that doesn't agree as well. Pretty much regionals agree with me that the bond yields aren't going to stay high forever. Otherwise, you would think the future assessment would be a little worse. So, and then again, if they do benefit under a Republican sweep, again, it has a lot of upside, and then it's already leading the way. So like I said, I don't have a play on it. My only problem is that it's already up a lot, and then it's a regional bank. So, I mean, it was 50% cheaper not too long ago. So we'll see where it ends up taking us. But that is my third play and final play as far as everything else. The plays I made today, I grabbed a Tesla 290 in the morning for $31. It's worth like $170 now. That went up like 450, 500%. So that was an awesome one. Again, we gave the call out, but that was the post. I only grabbed one. Again, I've been keeping it small, man. I've been keeping it very, very small. This market has a lot of opportunity, a lot of tomfoolery, and then obviously we have the election, but as long as you're managing it, that's the way I'm going with it, by keeping it small, making things free. So I'm probably going to ghetto spread this, but I held it all day. I thought it was good news. It ride out. The contract played good, so still going to be riding that. We have till next week. That was my first play. Then UPS. So again, and I kept this one small. I'm glad I did. I did the same thing with 3M. Remember, I kept it a lot cheaper there. I didn't want to spend too much because I liked UPS, dude. I thought their earnings were good. It was up the most that it's been in 2 years. UPS was literally up 10% in the morning. Hasn't moved like that since February 2022. And it seemed good. The CEO was a little bit more bearish on the industry on the call, but like I've seen way worse, but it just sold off half of that and there was no continuation. I remember I had those old UPS leaps. They went up a couple 100% and then they came down, and then I went for the continuation. I grabbed November 15th 180s, but I spent $8. I bought them at 4 cents a pop. I thought I even spent 5, but it was ended up being 4 when I double checked. But that one was small, ended up getting washed. I don't think those will come back to life. And then I played EW. That was my earnings one. About $90 both ways, $45 a pop, 87.50 call, and then 57.5. Just outside of 2 standard deviations by 1 strike because I didn't want to spend $120. So I saved $30 by going a little further out. So that one didn't move, but I think we might get one following the earnings. So we will see what happens. We will see what happens, but Chattadonia, that is all that I have for the plays. I appreciate you sitting through that, but now, is there any questions, whether it's the plays, the regional banks and the Donald Trump, the bond volatility, the TIMIRAOS tweet in the rate path moving forward? I'm still getting worked on bonds, but Again, today gave me a little more confidence, but I want a little bit better of a price before all in. Anything else? Go vote, baby. Go vote, baby. What do we got? My head is awful, dude. It hurts so bad. I don't know. I'm not like dizzy, but I took a nap. I didn't go to the gym. I was like, I can't. I was like, nah. I was gonna go to the gym, and I was like, you know what? I'm gonna just lay down. So I took a nap before. I was knocked out. I have questions if you want to hit the chat facts. Okay, that's a little bit of I like it. It's kind of like an offer. You said D. What about NYCB? I would go for the index because then you could be more diversified. Because again, if you pick only one, if they're a winner or a loser, that's a winner take all system. So I think the ETF KRE will go a long way. It's political bond manipulation. I kind of agree. And I even saw it the other day though. It's like somebody said it. They had a different take. Let me see if I could find it. But like the bond, this isn't even the bond vigilantes. And I told you that, ironically, at the beginning of all this, I said this like days after the rate cut, like right after, because, dude, this is like all of a sudden, right when the market got its rate cuts in a big one, it stopped pricing in future moves. Yeah, this was it. So look, because this is what it was saying. It's saying like if you look the difference between the 30-year and the 6-month, this has been a way that some people have monitored bond vigilante activity based on that volatility, but it's not even there. And I agree with this completely. So it's kind of wild to think about, but you're not getting the same, like, this isn't what we've seen almost every month and every year of trying to play this front run game with the Fed during this whole cycle. Every time the market was given something, the bonds would go insane. And all of a sudden, right when we got this rate cut, it just stopped moving. I forgot who sent me the other clip. There was another one, the Fed guy today. I showed it on stream. He was a former Fed governor, and he even talked about some of the politics stuff related to it. But that's the thing where I'm like, at least there is something. I think KRE sticks out like a sore thumb. So you don't have to care. Like, who cares if the media is lying to you? I hope you pay attention, because when I'm saying, one, it's not only about bonds. Screw the bonds. That's only going to be one part of it. But there's 15 other asset classes. There's going to be more than one trade. If anybody is taking a major bond short, I would put a lot of money there buying something else, and that money is also going somewhere. And again, I think KRE might be one of those things, but even then, the regional banks are not responding to that same respect. Now, granted, they did just have earnings, so maybe that's making some noise, but other than that, I mean, the bonds, let them do their thing, but they will snap back to reality. And I even, like I told you in the beginning, I think people are getting ready for that. So like I'm saying, on election day, watch. I will put a lot on it that everybody was like, Donald Trump is so bad, he's going to cause inflation. If he wins the day of and the day after, they're going to be like, well, even though his policies are really inflation and he is Hitler, his policy, it will take 2 years to come into play. That's why the bond market is doing this. They're going to say that right away. So that's what I'm saying. Just be on the lookout for it as we get into it. But, there's a lot of different opportunities that you could sniff out. So, ta-da! What else we got? Real estate. I mean, real estate is mad slow. I mean, it really depends on your mindset. Depending on what you're trying to do, renting, agent, all of that stuff, flipping, but still a great opportunity. But, we got to see what happens with rates, and that will do a lot. But generally, if longer term inflation expectations tick up, I mean, unless we get a hard landing and like real deflation, I don't think real estate is coming down, sadly, which is kind of weird. But like literally, and I say that because, like, if we do get deflation, I have put out theories of Donald Trump causing deflation, that could cause a certain reaction. But with long-term expectations ticking up, some of the data, the rates, if there's no deflationary Donald or deflationary Kamala, I don't think house prices are coming down. I mean, I don't want to. I hate to bring up this topic, even though I brought it up a lot live on stream. And remember, my family, I'm literally a child of immigrants, but you got to think about it. And this has to do with value. I'm telling you this for real estate prices because, again, we were just talking on cold real estate. Some agents had to adjust from a market where there was 9 to 7 million houses sold in a year to now we're getting like 3 and 4 million houses. But do you realize that's how many homes were sold in 2023? It was like 3.4 million or something, or 4 million houses, 4.3, I think. So you got to think in the whole United States, 4.3 million houses, individuals, BlackRock, the hedge funds. But that's why some people do bring this up with immigration, because you got to think about it. If we had even 9 million or 10 million immigrants in 1 year, even if 25% of them wanted housing, that would be the whole entire amount of homes that were sold. So have whatever political opinion you want, but I'm telling you this because that's why I'm saying real estate prices are not coming down unless there is a deflationary impulse brought about by Trump or Kamala. I think Trump could bring it about, and I mean that in a negative way. Deflation would be scary, but that's where I'm saying, like, you're not going to get it's just, other than that, if all the inflation signals start going up, the population and everything, I mean, you're going to get there's a low supply still, and that's what's keeping prices high even though the sales activity is slowing down. The deflation indicator, I mean, it would probably be policy, and it would be the dollar and other things, but it's kind of harder to sniff out. It just has to slow down. And I do think Donald, I think you'll get deflation if Donald wins, and then they're like, oh, job revision, it all was awful. And then if the market kind of reacts immediately, But yeah, I would say job loss and price loss and inflation rapidly coming down, and even oil and commodities ripping. I know that may sound ironic for deflation, but that it could be a signal leading into it. So it's very wild, but that is something we have to think about. I'm here for your voice. What up, baby? What up, Moses? How you living? You said REITs won't drop again. Seems stagnant. I mean, they're less likely to, because again, if they're tied to bonds, but that is a play-by-play, It make sure you look at their portfolio and let that tell you, because again, every REIT owns a certain set of stocks. The volatility index for bonds is MOVE, MOVE. It's like the B of A ICE indicator. So MOVE, enter that in on TD, and then you like click it and press enter, and it'll come up. The cost of building homes, it's came down a little bit in terms of materials, but the cost of labor is still elevated, but it has come down from like the peaks. But then again, too, I mean, I said it, I mean, I hire a lot of Venezuelans for the flips. I know Lending Tips has his crew too, but you also have that comes into play with the offers. Oh, hold on. My girlfriend's rude. She called me Harry Potter, bro. I have a cut above my eye now, and now I'm Harry Potter. If Trump's elected, who do you think will be press secretary? Oh, I don't know. I applied for the job. I said I'm willing to show my face. I said I could shut down a hoe. I said I have minimal experience with propaganda, but I'm willing to learn. My biggest weakness is that sometimes I just work so hard and effective that I just get blinded by the goal, and I work so hard. So yeah, but I'm always willing to learn. Anything really similar to MOVE? No, I think MOVE is like the only index as far as like bond volatility. I have an old video on it. I go over it a little bit in depth and how they get it and all of that. Who's buying the homes they're building? Not your average person. Yes and no. I mean, you know what I'm saying? Like, it is, it's weird. There's definitely diversity, but there's a lot of Americans who buy homes for work. they got to move and relocate. Don't underestimate how many of those transactions. And then the word that I keep hearing, and I don't know, it's like maybe this is the start. Maybe we need 6 more months. But the word that I have heard in real estate lately from individuals, because again, you guys got to realize, like when I deal with people too, I mean, or even like the people I know, even seeing Lending Tips' business, it's a lot of like just average Americans like buying homes. Like this isn't like, it's not anything crazy, but the word I keep hearing is downsizing. So that's another one. You have people who move for occupation, and then obviously you have investors and speculators and first-time homeowners, but a downsizing. I've heard a lot of that lately, because you got to think about it. People have that prices are still high, equity is up, but people are saying, hey, let me get out of this house, take the profits, and then go get something good. But it's a weird market right now. We were talking about it yesterday on the Colt stream. That's why I wasn't live. But dude, even then, I saw LT do it the other day. Lending Tips just started off an offer like 150 grand below as the listing, and these people are entertaining it. So that's another thing too. It's a really slow market, and we were talking about a lot of the differences because it's just different than what it was a couple of years ago. And if you were new to real estate, you have a whole different expectation, both buying and selling a home. Even home buyers and sellers, like they think that homes sell like hotcakes because that's all we've seen in the last 48 months. But fact of the matter is, any other period, homes are very illiquid. They don't move like that. And now you're finally, people are kind of getting back to that reality. So it's altering psychology, prices, and all of that. So just don't underestimate though, like, the average American is buying and selling homes more than you would think. Again, it's only like 4 million homes all around the nation a year. It's still a lot, but this is, the biggest transaction most people will make in their life. Your parents both renting, they're downsizing, baby boomers are exiting. Yeah, I've heard it. I've heard that so much. Downsizing is the word, but it makes sense because, again, some people, it works, and then they want to save money as well as, hopefully get a better deal. And there is some deals for renting. If you're, again, right now, that's how it should be. Renting should be cheaper than buying, and everything too. Anything on a home, and you're even asking, you could even imply that a lot of investors are buying real estate, but it's only the big money right now. I'm telling you, the only people who like real estate right now as an investor for like cash flow is literally cash-heavy institutions, because they could just throw out their cash and get a yield. Because right now, the statistics, I believe this is a fact. It is virtually impossible to cash flow on a home right now if you're buying it on a loan. Because, again, rents should be cheaper. They are now. But, like, with the mortgage rates, no, even in the Midwest, it's still difficult. If you're buying on a loan, you can't go and take out a 6.88% loan and then buy one of these houses at still an elevated price, and then now the rents are going down, and then anything else. It's very difficult to cash flow on a property. You have to either have bought it at a much lower price already. If you already owned it, that's a different story. If you have different interest rates, but if you're trying to just buy on a loan right now in cash flow, it is virtually impossible in this environment. That's what I'm saying. Only if BlackRock, if you got billions of dollars, you're buying it cash, you're getting that 5%, diversifying. Big money, they love this market right now, but this isn't, if you're using any sort of financing, unfortunately, you're kind of getting Dodd-Frank. It reminds me of that back in like 2016. And then I need to get a water. Hold on. Do I have any Kamala clips to show you? Or is there a town hall? Yeah, I think you got a JD town hall. So let me go get me a water.
Abortion is an all-inclusive subject for them, and they didn't seem to read the change in the room, which is that it's now reproductive rights, because we've had the first class of Americans, happens to be the majority of Americans, in our lifetime have a right taken away from them.
All right.
And you can explain it any way you want.
Wait.
But that's what happened when they took Roe off
Why
the
is he
books.
not letting him
And
talk?
It's
I'm being so. Wait, I was looking at this.
Issue. Abortion is just one
Wait, what's happening?
That someone can make as a health.
That's not live.
And it'll be interesting if they're not reading it right. I wonder if they're assessing.
Is it live?
Thank you, Chris. Thank you for having me.
Am I tripping?
Congressman, take care. 4 minutes and 30 seconds. When we come back, the senator was asked the single most important question that a VP gets asked. Are you ready? Because you're a heartbeat from the presidency. And that's actually more germane to Vance than it is for Walz. And we all know why. His answer and its implications next.
So many people in my generation, they're delaying having families, they're delaying getting married because they can't afford a place to raise a family. This is the biggest threat to the American dream, I think, that we've seen in a generation.
I wish my TV provider let me choose what I pay for.
Sling lets you do that. Hey, where are you going?
I wish my TV provider let me choose what I pay for and let me pause my subscription when I want.
Sling lets you do that.
Who?
I wish my TV provider let me choose what I pay for and let me pause my subscription when I want and have hundreds of free channels.
Sling lets you do that too, Mr. Fish.
Choose and customize your channel lineup or watch for free. Sling lets you do that.
Even with my mom's Alzheimer's, we've still been close. But when she developed agitation that may happen with dementia due to Alzheimer's
I'll give you guys
disease,
that. Support Elon. You know, why not? My bad. But yeah, where were we? We're talking real estate, homes. So again, I mean, and that's the thing, bro. I don't know. That's one thing I'm disappointed about with Powell is that they have been, I won't call them liars, but they've been very incorrect on that one. Literally just, every year since 2021, they told us real estate, the rents would renew, and then it would come down on the CPI, but that's still up. So that's the thing. BlackRock liquidating properties in Florida. That would be awful. I mean, if the hedge funds did sell, they have a lot of supply, and like I was just talking about, it's a very slow market right now. And then that's the thing, though, is just like one domino after the next, though. You don't want the avalanche to start. And I don't think it will unless, again, we need a real deflationary impulse. But like I'm saying, some people are entertaining lower offers. If they have enough equity, if it sits on the market long enough, they'll entertain 100K below, 200K below. It's actually kind of wild because, like I'm saying, just a year ago or 2.5 years ago, this was my favorite response. And God bless you, Miguel. How you living, man? I hope you've been good. This was my favorite response. I would always remember. I would lowball people, or I would give them I would honestly these weren't even lowballs, honestly. Sometimes these offers were just not $100,000 above asking. But I remember I would ask people a price, and you know what they used to tell me? I know what I have. I know what I have.
a distance came between us.
No, I don't want. How do I get this back? That I don't hear that anymore. That's, you see what I'm saying? That's the difference in psychology, is that, now the people with hundreds of thousands and millions of dollars of equity in their homes, they're not as they're getting less greedy, and only because they see the neighbors, they see them, like, again, half of the houses are selling than you were at the peak when there was mania. Again, from 7 million to 4 million, 8 million to 4 million. You know what I'm saying? People are now like, oh, okay. All right, well, maybe they'll at least be like, put it in writing and let's talk. So it's a very interesting concept, but, we do have to see real estate move. I mean, real estate moving will be a big determinant, with inflation being really sticky or not. Because, again, it has been. It has not came down at all. And that's why we're saying, if inflation expectations, if they are going to come up and inflation stays up, I mean, real estate will probably be a culprit when that is all said and done. Mm-hmm. So what else we got, man? What else we got, bro? Any final questions? I don't know. It's not playing JD. I might call it a day then, unless you have anything pressing. I don't know if I'm gonna play Call of Duty. That's in 2 hours, bro. I did take a nap, so I don't know. On the coin, if Kamala wins. Oh, I made I told you, I told this story. I did a test coin. I didn't tell anybody about it, but then I made a mistake, like with my first time setting it up. Like I got the coin minted, I learned how to do all of it, but then I ended up, somebody ended up sniping like a third of my supply and within 4 minutes of me putting up the liquidity pool. Yeah, that thing I posted, here's the thing. What I posted on Instagram, that has nothing to do with crypto. It's funny how a lot of you thought that was crypto. It's crazy. Does anybody know what I posted on Instagram? Go to my story. Does anybody know what that is? Maybe I'll give you something. I don't know, but then you're just gonna AI it probably.
Every VP candidate.
Anybody know what it was?
Account for, which is, are you ready? Take a look.
God forbid something happens to President Trump. Are you prepared, or how are you prepared to lead this country?
I think that what I'll draw most on, of course, is my life experience. I think that's true for anybody in any job, right? And look, I served in the United States Marine Corps, so I saw the consequences.
Yeah, the signature. Do you know whose signature that is?
I built a business. I created jobs, so I saw the consequence of bad economic and
doctor.
regulatory policy. And of course, I've served in the United States Senate, so I know a little bit about government. And I think that that's what we need.
Is this live, or is this a recap?
People who know a little bit about government, but not people who are career bureaucrats or career politicians.
Yeah. Financial Times going to be at your school talking about the economy and presidential election. Nice. Ask them if there's more than one asset class part of the Trump trade. Yeah, so that wasn't, it's not Kobe. That's a good guess. Do you want me to tell you, or should I just keep being mysterious? It's because it's an interesting one. It's kind of educational. I mean, I think I'll tell you. I want you guys elevated. You want me to give you a hint? I could give you a hint, but then I'll give it away. Every hint will give it away. Keshkari? No, it's not Keshkari. Yeah, it's P. Diddy. I'm like, woohoo! That's it. I cover it and rub it in baby oil every night. What doctor? It does look like a doctor's signature. Jerome Powell. I would ask him for a signature. That'd be dope. So that signature, and tell me if you know without Googling. That is the signature of George Condo, not Kamala. Do you know who George Condo is? Condo. Charles Barkley. Well, good. There you go. I would look him up. It is a piece of art. So, he is a very, very well-renowned artist. Yes, he has done a lot. He's had, I think his highest auction was $55 million for one of his works. But, yeah, he's kind of modern. He kind of blew up... because he's like old and young. He's not dead. He's not one of the dead ones, but he's in the list of the people like, I don't know. I don't know if I could compare him to Basquiat, but it's an interesting one. Go look into it. So, yeah, no, but not P. Diddy. Not P. Diddy. But that being said, Chattadonia, I'll leave you with that. I don't know if there's anything else you need, but I will see you tomorrow morning. In the AM, be blessed, be safe. I love you all. Get rest and don't run into the door when you go to the bathroom. That's it. That's what I'm going to do. I'm going to go ice my head again too. But I love you, baby. Be on the lookout for some trades tomorrow and get ready for the final stretch. It's game time, baby. And shout out the long term. I hope I didn't rant about the long term yet, but please, you guys, don't forget. I got a lot of people who not only started the long term today, but I'm very, very proud of you who have, man. Again, and this is the opportunity to have an account at all time highs. And if you don't have one, we'll get one. But you got to make that discipline, baby. So let's get it. I love you all. Finger to the sky, baby. Don't ever forget. And horn off. Peace out, y'all. Good night.